Hi friends, today we are looking at various tax rules or tax rates for trading and investing in the Indian stock market. Before we proceed, one very quick thing that hey, please work with a qualified chartered accountant, and there are plenty of them around for your taxation needs. In fact, I have found a good YouTube channel of a CA who uploads a lot of good videos. Look at them, consult them if you really want to do this. I am simply sharing what I practice for my tax planning, but for your tax planning, I am requesting that you work with a chartered accountant. Okay, so let's understand the taxation rules. What kind of tax are we covering over here? We are talking about income tax. If you made a certain amount of rupees while trading in the stock market, what tax will you have to pay at the end of the year to the government of India as income tax? There are other taxes like securities transaction tax, DP charges, brokerage. These are basically covered in my Zerodha charges video in detail. So you can look at that video at the end of this video. I'll give you a link in description. But today let's talk about income tax. There are three kinds of primary income that you can have in the stock market. First is intraday, which is a speculative income. So if you buy or sell stocks or short stocks in intraday and close the position on the same day. You remember I've made a video about how to do intraday selling. So if you do that, your income is considered a speculative income. So you have to understand that it is considered speculative business income. Then there is something called long-term capital gains on listed equity and short-term capital gains on listed equity. Now, long-term capital gains and short-term capital gains we will look at in this video along with speculative. FNO is business income, and that will be covered in a future video. So first, let's understand intraday equity or speculative income. Speculative business income, it is basically just added to your income tax slab as a income, and whatever is your income tax slab rate, you will pay tax on that. So for example, if your salary is 4 lakh per annum and you earn say 50,000 rupees, you will treat your total income as 4.5 lakhs, and that's it. You will pay whatever tax you will pay on a 4.5 lakhs income with all the deductions applied. Now, if you made say a profit of 50,000 rupees during the year and also loss of 20,000 during the same year in intraday equity, you can get all of these reports easily from Zerodha, and how to get P&L reports from Zerodha, that's easy. I have a video on that. You can look at that separately. So your total income here is 30,000, and this is basically what you will report as your income. So it can be set off against each other. Your profit and loss can be set off against each other. But if say your income was 10,000 during the year in intraday trading and your loss was 20,000, then you have made a loss of net 10,000. This loss can be carried forward for 4 years. So for 4 years, your losses can be carried forward, which means that if I have accumulated loss of 20,000, next year, in the next financial year, if I make a profit of say 30,000, I will deduct this 20,000 and I will pay tax only on 10,000. A lot of people forget to take this carry forward into account. You have to report it in your ITR, and for that you need a CA to file your ITR or do your ITR filing yourself online, and you have to claim this loss for this loss to be carried forward, and you have to do your filings on time for this to happen. If you do your filings late, you cannot do this. So simple rules: it's speculative business income, it's added to your total income and charged at slab rate. Whatever your tax slab is, you will be paying income tax on that. It's just like someone giving you extra salary. It can be set off against losses of the same kind, which is intraday losses, and your losses can be carried forward for 4 years. Remember, taxation is a very complicated matter. If you want me to get a CA or an expert to do live chat with you, to do a YouTube live around this topic, subscribe to the channel and drop me a comment below so that whenever I do this live and if there is enough demand, hey, you will be notified. Now we come to the long-term capital gain and short-term capital gain. Now, before we proceed, let's understand what is short-term and what is long-term. So in case of mutual funds, equity mutual funds to be specific, 1 year is long term. In terms of listed equity, 1 year again is long term. In case of debt funds, 3 years is long term. So if you have held a debt fund for 3 years or more, it is long term. Mutual funds, equity mutual funds, and listed equity, if you have held for 1 year or more, it is considered long term. So in long term for mutual funds, you pay 10%, listed equity, you pay 10%. If you make 10,000 profit, you will pay 1,000 as your tax on this. Simple. Same over here as well. For debt mutual fund, it is a little more interesting. If you have held it for 3 years, you will pay 20%, but you will get an indexation benefit. And if you do not take the indexation benefit, you will get 10% as taxation rate. So what is this indexation? Indexation is basically a schedule published by the government where price or cost of your equity is assumed to be increasing. Your cost price is assumed to be increasing depending on certain factors. You can say basically it is increasing at the inflation rate. I'll give you a link to see how much indexation you get, but practically I don't expect there to be a much difference between 20% and 10% with indexation or without indexation, but this is the rule. Now for short term, if you have mutual fund income, it's 15%. If you have listed equity income, it's 15%. Remember, this short term does not include intraday. You have to hold it at least for 1 day. And if you remember my charges video, intraday charges are low. If you hold it for even 1 day, your immediate brokerage charges and everything is a little higher. But that's beside the point. That will come under tax planning. And for debt funds, it's again at slab rate. It will be added to your total income. Now there is one rule about long term, and that is why you see this asterisk that I have over here, that you get exemption of 1 lakh rupees each financial year. So if your total long term capital gain in mutual funds and listed equity together is say 90,000, you will pay no tax. If it is 1 lakh 10,000, you will pay tax only on 10,000, which will be 1,000 rupees, which is 10%. So you get 1 lakh rupee deduction each financial year. If you do not claim it in this financial year, it is not carried forward. For example, let me explain you this part very in detail rather nicely. So say if I held a stock for 3 years and I made 300,000 as profit. So my profit is 3 lakhs. At the end of 3 years, when I sell and book this 3 lakhs as profit, I will pay tax on 2 lakhs. So I will pay 20,000 as my tax. But had I done something called tax loss harvesting, I could have paid theoretically zero tax on this. And tax loss harvesting can also be applied for other things like short term. So I will cover it in a different video. But basically, remember this 1 lakh limit is for each financial year. That's what you need to remember. If you have questions, please do ask me in comments. I know there will be all kind of questions in your mind. This can be slightly complicated. I'm trying my best to explain it well to you, as I always do. But hey, I can ramble, I can miss out some details, I can try and oversimplify things. So please ask me questions. I will try and answer all your questions. And if I cannot answer them in comments, I'll make a new video to explain. I'll do anything to explain this to you well till you understand it. That's my commitment. Okay, I'll even get a chartered accountant live on the channel to talk to you about this. Anyway, let's move forward. Now, what is combining statements at the end of the year? Remember that you may have accounts in Zerodha, Paytm, Grow in different places, like what I do. You will get different statements. There will be different long-term capital gain, short-term capital gain in all of these accounts. I want you to add all of them together. All short-term capital gain, all long-term capital gain added together, right? Basically, you will take, say, Zerodha, Paytm, Grow. You will take long-term capital gain from each of them and add it. And you will assume this to be a total long term. You will repeat the same thing for your short term capital gain. And then you will do the same thing for your intraday as well. And then you will pay your taxes on that total, which makes your life easy at the end of the year. All of them give very good reports which you can export. So you will apply your tax on aggregates. Government does not know if you what you did in Zerodha Paytm separately. They will simply look at your DP account or AMC account and see the totals. Now, this topic, I realize I have already taken 10 minutes of your time. I'm really happy that you're putting in such commitment to learn and learn from me. But I will not hold you back much longer today. I want to show you something called tax loss harvesting by doing a live transaction, hopefully. And for this, I will make a separate video on tax loss harvesting and tax planning. There is something called advance tax. If you are making significant money and your tax will be due, you will have to pay tax to the government at the end of the year, in which case you have to pay advance tax and there are rules around it. So we will talk about it. And FNO is a whole different beast. FNO is business income, and then there is 8 years of carry forward and whatnot. It can be really complicated. So for FNO, if you want to make your life easy, I'll link a video on a good YouTube channel I have seen to give you FNO taxation. And if you want me to make a video on FNO taxation as well, please do comment and let me know. If you subscribe to my channel, it really motivates me to keep making videos for you. I realize that 95% of you haven't subscribed to my channel. So I'm really hoping that if you have made it right until the end, you will consider subscribing to my channel. Thank you so much.